We always like to spotlight our presenting sponsors. You can see their logos also in front of you on the screen. Want to say thanks for elevating not only the show, the nonprofit show, all of our episodes. We're coming up on 200 episodes by the end of the year, but truly for stepping up for our sector at large during this crazy year that we've all been experiencing. Julia Patrick, hello to you. Julia is the CEO of the American Nonprofit Academy, and I am her very fortunate co-host that keeps her job somehow, even though there's times that I need to, be somewhere else. But I'm really fortunate to serve as your co-host, Julia. I'm Jarrett Ransom, the nonprofit nerd, also CEO of the Raven Group. Now, this logo probably looks familiar to many of you because we do our Asked and Answered, which thank you so much to Jennifer and your part-time controller. And today, Jennifer, you're joining us again to really talk about your bailiwick, your zone of genius when it comes to accounting, everything to do with financials, and in particular, what you see on the screen here, year-end preparation. So welcome, Jennifer. Thanks for joining us.
Thank you so much for having me again. And yes, our specialization is accounting, financial management for nonprofit organizations. And we help every one of our clients with their year-end preparation for their audits, their 990s, getting ready for budgets, 1099s, their W-2s, and all of that good stuff. So yes, very familiar.
So we're really excited to have you on. And I think that it's really important that in this tumultuous situation, a general election, a pandemic, a changing economy, I could go on and on and on and on and on. The reality is accounting has not changed, nor have any of the constructs and the filings, right?
No. So, who could have imagined this year? I keep thinking back to last year at this time. What was I thinking about? What was I planning? What was I doing? So many things changed in 8 months. And so accounting is not changing because of the pandemic, and financial reporting is not changing. We did have some reprieves in filings of 990s because of the pandemic and everything, all the shutdowns and such. But that's stopped now. All the filing deadlines are still the same, and we really do have a lot to do to prepare for year end, as we always do.
Yeah, I think that's really important to repeat is all the filings and the deadlines are still the same.
They are. Nothing that I know of has been pushed out anymore. All of them now are back in place.
Well, Jennifer, when we first met with you early in the pandemic, we had you on to talk a lot about the PPP, a lot about the CARES Act. And honestly, it was like every Friday you got an immediate update on something that was changing. So I hope you feel now, even in this crazy time, that there's been a bit of normalcy back to your life.
It is coming to a different cadence. It's not as hectic and as crazy as it was back in the spring and early summer with all the new regulations coming out. But now, there's just a few new things at this year end that we're dealing with because of the pandemic, because of the PPP loans and loan forgiveness. People are scrambling to file for forgiveness. And then also there's going to be new disclosures in your financials as it relates to PPP. So that's something to think about.
Well, we have a lot to cover
for sure.
Yeah. So I guess that's the good start. I mean, I don't want to say good start, but I mean, a way to start is with that word reconcile. Yep. I mean, it's a reconciliation of a lot going on.
So I love to say, or we love to say at your part-time controller, reconciliations aren't for just year end. We don't say reconciliations just for year end. They should be done every single month. And if they're done properly every single month, you don't have this scramble or craziness at the end of the year. However, many nonprofits do wait till the end of the year, and then they're calling us, please, can you come help us reconcile? So just important to know that, a good best practice is to reconcile your accounts every single year. And what does reconciliation mean? It just means that making sure that all of your financial transactions are recorded in your general ledger or your accounting system all the time. And that you compare those, what you have in your accounting system, to a third-party source, whether it's a bank account, your bank statements, or payroll records, or your list of contributions or your donor database. So that's what we're talking about with reconciliations.
Mm-hmm.
So what do you reconcile? Well, if you reconcile your cash accounts and you do this regularly, you're going to have 80% of this reconciliation nightmare done. So that is, and now with the great linkage of applications, your bank systems to general ledgers, it makes it a lot easier that you can link those transactions together, and it makes it a lot easier. There's other accounts to reconcile too, but all of your material balance sheet accounts, your assets, your liabilities, and your net assets should be reconciled. Assets meaning, your accounts receivable, your grants receivable, and your liabilities, any loans that you might have, or deferred revenue. And net assets is really important, and that's a tough one, because that's whether it's contributions that you have received with or without donor restrictions. So that might take some time to make sure it's right.
So then you also talk about another big area that we should be looking at is getting all those vendor W-9s, W-8s, and the 1099s filed early in 2021. So there's a deadline of January
31st. So
okay.
To file your 1099s, to provide the 1099s to the recipients that you must send them to, you have to have that done by January 31st. Mm-hmm. You have to have the form, the 1098 form, that is the overall cover page, I guess, if you will, your summary of all your 1099s that goes to the government by February 28th. Okay. So if you have any tweaks that you need to make to your 1099s, once you send them out by January 31st, you can do that before the end of February. But importantly, there's a new 1099 form this year. Just thought, we'd make it even more fun this year, that we have a new 1099 form that replaces a lot of the 1099 forms that we've used in the past. It's called 1099 NEC, or non-employee compensation. And that relates to typically your independent contractors. And that's those individuals that you pay more than $600 to in the year, you have to issue a 1099 to. And then certain LLCs, or those organizations that are not incorporated, that you pay over $600 to, you have to issue to. There's this 1099 miscellaneous that covers like prize money that you might give out, but it's going to be less used than the one that you really have to focus on, which is your 1099 NEC. So importantly, right now, to prepare, get your W-9s from your vendors. And best practice is you get your before you even pay a vendor, you get that W-9 so that you have their taxpayer identification number and your information all ready to go before the end of the year.
Smart.
Jennifer, I'm laughing over here because usually, we talk about all these acronyms and it's acronym soup, and now you also this conversation brings in a string of numbers. So it's not only acronym soup, it's this number plus this number and a few other acronyms behind that number. So the way that you're able to keep all of this in your head and truly nerd out over it is just mesmerizing.
It's true.
Yeah, well, we are accountants. We love the numbers, and if you're not excited about it as an accountant, maybe it's not the profession for you.
Right. Which is all the more reason that really, these organizations find great value in your part-time controller, because clearly this is a passion of yours. One of the things I like to talk about, Jennifer, and we kind of teed it up before we even went live, is this donors and their year-end donations. Yeah. And I had witnessed to you that unfortunately, too many times I see where the financial team and the development fundraising team work separately and don't necessarily consolidate monthly or ever really about these donations and year end. So I have had so many nightmare experiences, either on my own or with some clients of mine, where they send an acknowledgement letter and it's completely wrong. And how embarrassing is that?
So it gets a little hairy. And this is, I've taught classes on this in different to different audiences about, bringing together your finance and your development departments and how important that is to do, because you don't want these departments or areas, or maybe there's just like one person in each area in your organization to work in a silo. But it really does get confusing, because the way a development person or fundraiser might account for a particular contribution or pledge might be completely different on how the accounting or the accountants might put it in the accounting system. And that's really where I've seen the disconnect often. And it also has a lot to do with timing. When are we putting it into the fundraising system, or when are we counting it as a donation for fundraising, and when are we counting it for it as a contribution in the accounting system? Now, listen, nothing is more confusing than the year end, because now everything's running at warp speed, because we're really trying to get in as many donations as possible. And our contributors or donors are also looking to get that year end tax deduction and also give their holiday giving. So it's just really a confluence of all of these factors that could really mess up an organization as far as, what are we counting? How much of the contributions do we have in that we should be recognizing? And, the way I always recommend to get around that is regular monthly meetings with your finance and your development teams. Just make it a regular part of your practice, standing practice together. That includes pulling out all of the donor records, pulling out all of the accounting records, and let's go through them and see what's what.
Line by line, right?
Line by line.
Yeah.
Line by line. Good.
We have a question that's just come in, and it's just a clarification, and it comes from Chitra, and she says, by accounting system, do you mean something like QuickBooks?
I mean, exactly that. So many organizations are now using QuickBooks. 70% of our close to 800 clients use QuickBooks. Many are moving to QuickBooks Online, which we are highly recommending. It's for many, I shouldn't say most, I don't know what most, but for many organizations, it's just like a great system to use.
Okay.
But there's other systems out there.
I appreciate you, Chitra. I appreciate you asking that question, and I'm thrilled that you would, without endorsing it, endorse the concept, because I think that's really important. And as another part of this, that is something that your software will help you do, is that payroll wrap up and the W-2s, or how you're working with another outside vendor.
Yes. So typically we recommend that our clients work with a outside payroll company that takes care of this, because it is so cost effective to use an outside payroll company for all your payroll needs. Even if you only have a few employees, even if 1 or 2 employees, just use an outside payroll company. They'll do the W-2s for you, but that doesn't negate your responsibility to review the payroll records and the W-2s. So it's really important that someone internally does that to make sure that they're right.
Okay, another tip that you have for getting ready to for your year end is to review the financials for any issues and research them. So today it's November 10th. Year end, I mean, in my mind, is upon us. We're marching through this, right? Talk to us about what you'd be looking for.
So I'm going to start similar to how I talked about the reconciliations, that it's not just a year-end practice to review your financials. This should be a monthly practice that you are receiving a full set of financial reports, including a balance sheet, an income statement, a cash flow statement, perhaps a forecast, and hopefully covered with a dashboard that gives you all kinds of great facts and figures on your key performance indicators. That should be happening monthly, so that at the end of the year, you're not scrambling to review your financials. However, the end of the year financials do take another level of importance, because those are what are potentially going to be issued to the public in the form of audited financial statements and or a 990. So that information really has to be right. So yeah, you want to review your financials. You want to compare them to your prior year to look for any differences or oddities. You want to review them and compare them to your budget and see how you turned out. And also that might identify places where you might have misclassifications. Are we making sure that our revenues are classified right as far as contributions and earned revenue, as far as contributions being broke down by governmental grants or individual contributions. And then your expenses, you want to make sure that the functional expenses are classified properly, whether it's a program expense, an administrative expense, or a fundraising expense. So it definitely takes on another level of review at the end of the year, but don't forget to do it every month.
That's where I see a lot of misclassifications when I work with my clients and they'll say, this is an administrative function. And I'm like, is it really? Because we want to make sure that we're truly putting it in the right bucket. And that, I will say, Jennifer, is time and time and time again, I see so many organizations that have misaligned really the numbers within those line items. And I don't mean to harp on financial, our professionals in the financial arena. But one of the missteps I see quite often is many financial professionals come in to say, oh, I'm very involved with financials in my for-profit world. I can absolutely do the nonprofit books, but they're so different and they're very, there's so many different nuances. And so that's why having you on to help, with this education component, again, absolutely have someone from the financial industry on your board, have them involved as a treasurer, but also heed warning that there is differences between the two books.
There really is. And when it comes to your listing out of your expenses, that's unique to nonprofit organizations, your functional expense classifications. And clearly on the equity side of things, your net assets and identifying those with donor restrictions and those without donor restrictions. And if you're from Philly, you go with or without. I don't know if you know that. That's a whole cheesesteak thing. But sorry, I can't
like it.
It is absolutely important to have individuals with finance backgrounds and an understanding of accounting on your board, but the people doing your books must have a nonprofit accounting knowledge background.
Absolutely.
Jared, right before we went live, you asked Jennifer a question. And so for those of you watching the show, we get our guests on a little bit early, for tech check. But I also think it's the time for sometimes Jared and I to ask our own questions. And Jared, let's review that concept that you were talking to Jennifer about, the issue of navigating budgets for this next year. And because you had some really interesting points.
Well, and it's come up before. So first of all, I want to say, that 31% of most fundraising happens across the nation in this Q4 timeframe. So Jennifer, you had mentioned earlier, I'm having a hard time with all of these J's today, but Jennifer, you had mentioned that this confluence of events happens right now. And one of those events really is forecasting our next year's budget. So one of the things that I've seen in, chat groups and different forums that I'm a part of is many nonprofit leaders are hesitant to forecast their budget because we're still very much in this recovery time. And actually, I don't even know that we're in recovery yet. We're still in the pandemic. So what has been your experience working with your clients across the nation, Jennifer, in regards to what can we do to prepare next year's budget, and how likely will it be that it's relevant and timely and, just authentic?
This is a tough one because of the increasing uncertainty of nonprofits' financial situation. I mean, I think there was, thank goodness we haven't seen a huge decline or organizations closing down that are our clients. However, there's definitely financial struggles. and in different sectors within the nonprofit world, one sector might be different than the other. So there's, the jury is still out on how nonprofits are going to survive the pandemic financial crisis, if we call it that, because there's just a lot going on, and we don't know about the second round of stimulus at this point, and all of that. So there's just a lot of uncertainty. So, but that doesn't negate the need to put some numbers down on paper that to at least plan for next year. And one way to do that is to do a worst case, mid case, and best case scenario. You could do that for the full year, or what I'm seeing, what many organizations are doing, just budgeting for a quarter at a time and breaking it up by 4 quarters, and perhaps taking it to the board and saying, listen, we'd like you to approve, we need an approved budget. So we'd like you to approve the budget for the first quarter, with the idea of we're forecasting, we have a kind of sort of idea of the rest of the year, and we have these case scenarios. So we're just giving you all the information that we can possibly come up with right now, what we know today. And we're asking you to say, okay, this is what you were approving for spending for this first quarter. And we'll revisit that at, say, the March or the April board meeting. And that's what we've been seeing. And actually, for a couple of the nonprofits that I serve on the board, that's what we've been doing. And I also think we're going to see, perhaps boards being a little bit more lenient looking into 2021, depending on the cash situation, on accepting a deficit budget potentially, but planning for how we would make that up.
So you mentioned a deficit budget, and that just makes my mind go, so many different directions. But I have worked with organizations before where they did need to submit a deficit budget. So I'm going to ask this really just off the cuff question right now, because for many that may be watching, or of course watching the recording, how dare we submit a deficit, or what do we say when we submit a deficit? How will that look to our community, to our constituency, and to those funders that we're soliciting support from? So what I've always said, and I'd love to hear from you, of course, Jennifer, is, really utilize the narrative portion of the financial narrative piece of any opportunity. So if we are working with a deficit budget, what are some of your tips and techniques in which we can complement in a narrative form to describe why?
So the deficit budget actually might be a good tool to take to funders in some respects and say, listen, we are really struggling right now, and this is why. Because a lot of perhaps our earned revenue, or whatever that story is, that is really the story of our business model. Earned revenue was affected, especially, like, think of a performing arts organization who cannot put on shows and cannot make revenue by filling seats. Funder, this is going to be a tough year for us. We don't know when there's going to be a vaccine. We don't know when we're going to be able to perform again. But we've done this, and this to help us try to close it, but we're not there yet. We need your help. So building that story around what actually happened, and that it's not mismanagement because, that we're submitting this deficit budget. It's the circumstances of the world as it is today. The other thing I think is a great way to frame it is put a few years behind you. So it maybe not just a 1-year budget. Maybe we look at a 3-year plan and say, well, this 1 year, if you stand it on its own, yes, it's a deficit budget. Let's look at the future when we think our normal funding sources or our normal income streams will be back. And this is where we think we're going to be. The other way to look at it is, how much reserves do we have from the past? We're just dipping into those reserves this year. That's why we save money over time, is for these years that might give us a deficit, but a negative bottom line. So it's super important to make sure you understand what your story is, and then be able to communicate that to your funders, to your constituents, to your board.
Yes, I was about to say, drive it home with your board so that there is one consistent message.
Yeah. And so that they're educated. I really appreciate you saying that. I really do. Now, as we get ready to wind down, because our time's going just like blowing by, I love this. One of your final tips is set up communications with your CPAs.
So,
Oh,
we always say auditors are our friends. We don't do audits, we don't do tax work, but we work very closely with the auditors and tax preparers. And it's super important that organizations stay in close contact with your CPA, your accountants, your tax preparers all throughout the year, but most importantly at year end to plan for the audit. What time, what's the timing going to be? What do they need your organization to prepare? It's usually called prepared by client, these PBCs. And that's typically all the reconciliations in a really good documented form. And they want the financials, and they're going to want all your footnote disclosures as well. So the other thing to talk to your CPAs about is, what are your financial footnote disclosures going to look like this year? The PPP loan is going to be the biggie this year. How are you accounting for if you've received a PPP? Some organizations might have a liability on their balance sheet. Some organizations might have contributions on their P&L. It's going to be a big difference depending on a few factors. Number one, if you're seeking forgiveness or not. And number two, kind of how your auditors actually believe in accounting for it. There's not, there are some general consensus on how to do it, but there's also some differences of opinion. And since there's not like real hard and cut fast rules here, some auditors might give you one answer, and another auditor might give you another answer. The other disclosures you have to be on the lookout for is going concern. How is your organization doing? Meaning the going concern is your organization going to exist next year? If your auditors are worried about that, if you're really in a financial bind, they might put in that going concern disclosure, and that's something you want to avoid if you can, because you don't want to, that's the highlight you don't want to send out to your funders saying, the organization might not even be in business next year. To avoid that, is a great way to do that is to put a great budget and forecast together and talk to the auditors about what you believe to be true as far as your ability to continue operations
going forward. Well, there's so much. You're just an amazing wealth of knowledge, and we are always thrilled when you come on. And one of the things, for those of you that have been watching us since the get-go, when we've had a big, I don't want to use the word crisis, but an upheaval with like these congressional actions, we've gotten Jennifer on the phone and said, look, we need you on tomorrow. And I remember one time we had you on, and it was like literally as we were speaking, the votes were being tallied for something. And it was something to do with the CARES Act. And you were like, this just in. It was like crazy. But we really appreciate you coming on, because this has just been a wackadoo year. And it's going to continue to be wackadoo, I think, into 2021. We can all agree. So here's Jennifer's information. Managing partner of your part-time controller with over 700 nonprofit clients around the country. They've seen and heard it all, and yet they're very calm. They maintain their composure. Their hair's never on fire.
We try.
I don't know. I know a lot of your team members, and they're very calm.
Yes.
Very calm. Hey, one of the things that we have, and I'm going to kind of show this up. We had Jennifer on a couple weeks, last month, and we did something about fraud. And I think that there's a fabulous one sheet that your part-time controller has prepared. And I think it's a great piece to add into this year end. So if you want a copy of that, it's a PDF format. You can email me directly, jcp at American Nonprofit Academy. I'll get it over to you right after the show. Or you can connect with your part-time controller at their website, YPTC.com. There's so many more things that they have on their blog and episodes of.
Our webinar. We just finished a Dashboard Nirvana webinar.
It was good.
Oh, you saw it?
Oh, yeah. I loved the guy that was on it. He was great. And he gave me a whole bunch of ideas. He was really good, Jennifer.
That's great. That is on. So if you want to see the recording, you can go to our website at yptc.com. The slides are there. We're also going to be doing another national webinar on December 4th called "Are You in the Dark About Your Financial Situation?" And we're going to try to enlighten people on how to get out of the dark on their financial situation. So that should be a lot of fun.
Does that come with a box of Kleenex?
Yeah. A little scary story to begin
Comes with light bulbs. It might come with light bulbs.
There's a happy ending. There's a happy ending. And you can call your part-time controller and we can help you figure it all out. We also are putting together a 1099 webinar on how to actually produce your 1099s, especially, using your accounting system or, QuickBooks or whatever you use. So be on the lookout for that as well.
Cool. Great. Awesome. Well, again, we're so grateful that you're here. I'm Julia Patrick. I've been joined by the nonprofit nerd herself, Jarrett Ransom. Your part-time controller stepped up and sponsors, I think, my favorite day of the week, Friday, because we do this really cool thing, ask and answer. You have 4 ways to get your questions to us. They come in from all over the globe. Very, very interesting. And the 2 of us answer what we think is right. And a lot of times we reach back out to experts and get them to weigh in. It's really been a fun thing. So you have to check us out. And again, you have 4 ways to get to us. We want to thank our presenting sponsors. Without you, we would not be here. And so we're extremely grateful for your support with our sector, not only just the nonprofit show, but certainly our sector. Hey, I'm totally jazzed about accounting. Once again, good job.
Fun. Accounting is fun.
It is. It freaks me out, I have to admit, but it's good.
Yeah.
It's really, really good. Well, hey, everybody, it's been another great show. We want to thank you so much, Jennifer, for joining us. And Jarrett, as often as we say this every day, I think it's really, really important as the country moves forward to even more grim statistics about COVID. And so we end today in a very meaningful way. Stay well so you can do well. Thanks, everybody, and we'll see you back here tomorrow.